It's now time for an in-depth look at the global markets, and for that I'm joined on the line by Dr. Hwang Seiwoon, research fellow at the Korea Capital Market Institute. Dr. Hwang, thank you for coming on the line today.
Thank you for having me today.
Now, Dr. Hwang, we are about a week away from the G20 summit in Japan. President Trump tweeted that he had what he called a good phone call with his Chinese counterpart, adding they will meet next week. This seems to have boosted investors' sentiment. The Dow Jones is up by more than 1.33%, and the S&P 500 is up almost 1%. How do you assess the global markets today?
Stocks ended sharply higher Tuesday as Wall Street increased bets on U.S. China trade deal after President Donald Trump said he will meet with his Chinese counterpart Xi Jinping at the upcoming G20 summit. Sentiment was also lifted by hope that the Fed will ease monetary policy later this year. Asian share markets jumped on Wednesday as investors dared to hope the Federal Reserve would follow the lead of the European Central Bank and open the door to future rate cuts. Japan's Nikkei rose 1.72% and South Korea's KOSPI gained 1.2%. There is reason for the market optimism. However, we need to remember there have been a lot of negotiations between China and the U.S. where they seem to be close to a deal, and then things fell apart. Hope for a U.S.-China trade deal diminished last month after both countries raised tariffs on billions of dollars worth of their goods. Trump also floated the possibility of imposing tariffs on more Chinese imports.
Now, Dr. Hwang, there is a massive announcement that will come on Wednesday, U.S. time. The Fed will deliver its interest rate decision. What can we expect, and what other factors apart from the Fed's announcement should we look out for?
The Fed is widely expected to strike a more dovish tone when it concludes its two-day meeting Wednesday. However, investors will monitor whether policymakers at the central bank lay the groundwork for rate cuts later in the year. Traders are pricing in 3 rate cuts before year-end, according to the market analysts. The meeting comes after jobs growth and manufacturing activity in May slowed down. This, coupled with lingering worries over U.S.-China trade dispute, has led to increasing worries over the global economy. Investors will also pay attention to the prospects of more stimulative measures from Europe. Mario Draghi, president of European Central Bank, said Tuesday that officials are ready with stimulus if needed, adding to expectations for easier global conditions.
Now, Dr. Hwang, the Bank of Korea released minutes of its latest meeting yesterday. BOK chief Lee Ju-yeol has been hinting recently at a possible interest rate cut, and members of the Monetary Policy Board also seem to be taking a more dovish tone. They will have a lot to think about after the Fed's decision on Wednesday. What is your interest rate forecast for later this year?
Several members of the Bank of Korea's rate-setting board expressed views over the possibility of slower than expected economic growth during the remainder of the year, also casting doubt over the central bank's growth outlook of 2.5% for the year. Minutes of its latest meeting showed Tuesday the domestic economy must grow above 3% in the remaining 3 quarters to reach 2.5% economic growth. However, such growth will be quite difficult unless the unprecedented boom in the semiconductor market re-emerges. As external uncertainties have increased due to the U.S.-China trade dispute and slump in the semiconductor market, many of market specialists expect the BOK to cut its benchmark interest rate at least once before year-end, depending on the Federal Reserve rate decision.
Okay, Dr. Hwang, I guess we'll have to see what happens after the Fed's announcement. That's where we'll have to leave it today. Thank you very much for your insights today, Dr. Hwang.
Thank you.